Welcome to Unstoppable Real Estate Investing Wealth. My name is Billy Alvaro, aka the Unstoppable BA, former billion-dollar mortgage banker gone bankrupt turned professional real estate investor, where each week you'll learn the tools, strategies, systems, and secrets myself and other highly successful real estate investing entrepreneurs use to start, grow, and scale their businesses, creating massive profits, and how you can too. And we'll teach you how to put those profits to work so you no longer have to. Get ready to finally experience financial freedom and generational wealth. Now let's get started. What is going on, everybody? Welcome back to another episode, Unstoppable REI Wealth. I'm your host, Billy Alvaro, the Unstoppable BA, ready to bring the heat again. Today I have a special guest, Ben Reinberg from California, Chicago and transplant going out there. We're not going to be talking fixing and flipping today. We're not going to talk raising capital for private lenders. We're not going to talk about wholesaling. Today, we're going to get into the commercial space. Ben, I understand you've been in this space for 30 plus years.
Yeah, it's been a long time. It's a little under 3 decades I've been in commercial real estate. And when I started, Billy, I was a young guy. And now you can tell by the gray hair and the dark circles under my eyes. I've been grinding for a long time. I don't grind as hard as I used to because I have wonderful people around me in my company, Alliance Consolidated group of companies. But I sit in our West Coast office and love what I do. And it's a wonderful business. It's been a wealth building business. I've been one of these guys that have survived this business for a long time, and I'm in the prime of my career. And I'm just excited because I'm in the point in my career where I could help a lot of people. And so I enjoy coming on podcasts like yourself. I enjoy doing my podcast. I own it. And it allows me to kind of give back to people and help people. When I was younger, Billy, no one really helped me. I had some mentors and people that I could lean into, but as you know, the internet wasn't really prevalent. And so we had to kind of get out there and hustle and talk to people and meet with people face to face. Pre-COVID world, I would say, and actually have a meeting and shake hands and hug people and have conversations. And so that was the story of my career, is building relationships.
Ben, did you start in this asset class, commercial, or did you start in single family? Like, go back in the day when you got started in this.
I jumped right into commercial. I didn't get involved in single family. I didn't really understand it at the time. I didn't own a house, so I didn't really understand all the nuances of residential. Now I've been through multiple houses and get it, and I've invested a little bit, like in rehabs of friends of mine and builders over the years, and seen in the area when I raised our kids in Highland Park, Illinois. There was a lot of development, and they were ripping down houses and creating McMansions back when money was really cheap. Whenever that was, late 90s or 2000s. And so a lot of development happened in our areas in the suburbs of Chicago. But for me, it's always been commercial. That's been my love. That's been the way I build wealth. And that's what I learned being from Chicago. And I say this multiple times, that there's so many incredible, talented commercial real estate icons from Chicago. And even New York, around your area.
Yeah.
That in Chicago, it's really simple to see the icons and what they do and what they own and how they build wealth. And for me, as a young man, that inspired me and said, well, I want to do that too.
So you started off, I'm taking it, out of college, you joined a group and started doing what? Were you an asset manager or purchaser? Like, what were you doing when you first started?
No, I'm a CPA. When I first got out of college, I'm a CPA. And I did that. I went through a tax season and I just hated it, and then got inspired, and then got into commercial real estate, and then, syndicated my first deal and just learned on the job. I was an aggressive kid. I always wanted to be my own boss, and I was very entrepreneurial. I don't remember the word entrepreneur really prevalent in the early 90s. And so I think it cultivated and developed that term. And so I wanted to be a business owner and a businessman, and I was going to do whatever it takes, Billy, to get the job done. So I syndicated my first deal and had great success.
What year was that?
That was in the early 90s when I started, and syndicated my first deal and started buying assets to produce cash flow. And that was kind of what I decided to do. And I said, this is a way for me to build wealth. And ever since that first deal, I just kept going and pushing the envelope, pushing myself, pushing the boundaries of how do I get deals done? How do I meet lenders? How do I expand into different states that I've never even traveled to as a young man?
Yeah.
When I first started, Billy, the business was very regional and local because, there wasn't the internet. There wasn't like PDFs. It was more of, the brokerage community, as an example, would send you a shiny book with maybe a disc, and you'd go and you'd analyze it. And then they'd say, okay, Billy, the bid date is in 3 weeks. 3 weeks. So now I got to wait 3 weeks to get a bid in. I got to wait. So deals took a lot longer. And so we're looking at some very large deals and raising for those type of deals. We're building assets as well. And at the end of the day, it's been nothing but just hustle. It's just straight hustle.
It's work, brother. No matter what you do in life, if you're going to succeed and get to the next level, you got to work. You got to hustle.
You got to work. Even now, even though I could see a deal and see if it makes sense or not, I'm working. I mean, I am hustling. So I haven't lost that 23-year-old kid in me of hey, I gotta get shit done. I gotta get to the office. I gotta go do my morning routine, work out with my trainer, get in the office, lead, expand my mind, keep learning and growing. And I encourage everyone out there listening, you gotta keep growing and learning because life is changing. I mean, technology is spinning us around and moving so quickly that if you don't continue to grow and change, you just start falling behind. And so for me, I embrace the challenge. I know every day is always going to be a challenge. I mean, yesterday, I'm on the phone with some of my folks here. We're talking about lease renewals and negotiating leases and renewals and financing and selling assets. And so every day, what I love is something new comes up, Billy. There's always some new challenge. I'll get pulled into something, or hey, we're raising equity, we have an issue with this or that, or hey, this tenant is not signing documentation we need, or they're not providing documentation we need, or there's an issue at a property. It's just there's not one day, and it's like 7 days a week. And
Ben,
I can't preach enough that you got to continue to show up and grow.
It's all about solving problems. People think they're going to be their own boss and open up their own company and it's going to be easy and things are going to be, no problem, rainbows in the skies. Every single day, you're going to face adversity, problems, challenges, and you have to have the mental fortitude in order to quickly figure out how to solve those problems and then quickly freaking move forward. A lot of guys get stuck in the tracks. They become like a deer in the headlight and they don't know which way to turn. You just got to keep on making decisions and moving forward. It's all part of the game. This game is about solving problems, period.
Yeah, any businesses, especially commercial real estate, you have to be solutionary oriented. I say it all the time. You have to solve problems because every day it's and I will tell your audience, here's something that's really important. If you make a decision, go with it. If you make a mistake, it's okay. You can reflect back and say, okay, what could I have done better next time? I make decisions instantly all the time. We hire someone, maybe I overpaid that guy or woman. Okay. But I learned. It's hey, I wanted that person in the door. It was important to me. Okay, maybe we overpaid them and we learn a lesson, be a little bit more conservative next time. Maybe I made a decision and it was on a rental rate at a property, or maybe we decided to contribute 10 improvements to a tenant or something. And whatever it is, you're going to make decisions. You're not perfect. No one is. But make a decision and go with it and hold on to it and learn from it. And a lot of this business, and any business, especially commercial real estate, is you make so many decisions so fast every single day. You can Monday morning quarterback everything you do in life. And people criticize you, but they're not sitting in your seat. Correct. So I'll hear that a lot from people why'd Ben make that decision? Well, you know what? Put yourself in my shoes at that timing. And I have a lot of people, a lot of masters, depending on my decision-making process, whether it's leadership team, investors, lenders, you name it. Well, guess what? There is no way in hell, Billy, that I am ever going to make perfect decisions. But if I don't make decisions, I don't lead and have confidence in my decisions.
You don't
grow. I won't grow. And not only that, I can't inspire people. And here's the beautiful thing for everyone out there. Empower your people if you are an employer. to make decisions, and let them know it's okay if they make a mistake. Now learn from your mistakes and be methodical about your decisions. But I mean, I see more people where they don't empower their people and say, look, make a decision, figure it out. So we have this cool thing at Alliance, which I love. It's called 131. And I'll share it with anyone that wants to use it. Something that works really well in my company. Instead of having, your employee ability say run to you, it's identify the problem, the challenge. Okay. So that's number one. Number three is come up with 3 solutions to the challenge or the issue you're having. Okay. And then pick one.
Yep.
And so my leadership team and their people underneath them do the same thing. My leadership team will come to me and say, okay, here's the challenge. I came up with 3 solutions. I decided one. I'm deciding to go with it. What do you think? Perfect. Love it. Or, hey, have you considered this?
Yep.
Maybe you should consider this or an add-on to your solution. It's a collaborative moment. It builds great trust, great rapport. I encourage everyone out there, if you're an entrepreneur and your employees, it's a wonderful way to empower them. Because guess what? You don't want them coming to dad or mother all the time for decisions. You can't grow and scale. And so if you can empower your people, it's a wonderful thing I've learned.
What size team do you have that you're running, Ben?
We have about 8 people on the leadership team, and they cover different departments. It could be property, asset management, acquisitions, dispositions. It could be, accounting. We have all different departments because we touch so many different things within our business, whether it be leasing, to administration. We have, whether it's HR, compliance.
How many people in total do you have in your business?
We probably have, with independent contractors and within, probably over 60 right now.
It's a good sized company.
People, we're a small business, but we're very efficient with how we deal with people. So we have a ton of independent contractors that work for us, numerous hours. We also have employees. We have entire staff of administration as well. And then underneath that, we might have a company that works for us exclusively. Sure. And they have another 40 employees that we don't even count. So we have very robust. We figured out how to kind of minimize the direct employee within Alliance and outsource more or deal with. One of the things we also did a handful of years ago is got into VAs, which has been a big asset for us. We never realized that. Everyone was always full-time. Now, the VAs are hourly, and we'll bring them in from foreign countries, but they're outstanding. And they work in different departments. They're learning different departments. We have our property management department has a huge staff of VAs that work with them, and they're phenomenal, talented people, loyal. And so we've had to, Billy, I would say over the last few decades, just reconfigure how we do business. And one of the reasons is this remote hybrid work life that everyone's doing. And COVID kind of really pushed it more up there.
Yeah, it did for sure.
And so when I would take a step back and I look at when I started, we're a totally different type of company, the way we operate. I mean, you got KPIs and you got SOPs and you got more management. And so we're always trying to figure out how to empower people, bring a great culture. And so we brought a human behaviorist into the company, and that helped greatly because your personal life and business life affect each other. Well, Billy, if you were working for Alliance and you're out in New Jersey and I'm in California, I can't control everything you're doing during the day, but I could measure you. And because, that's the problem. It's like in Chicago, where I'm from and where our headquarters still are, we had a nice office, and the office there was this osmosis of someone could come into my office. I can come into your office. We can collaborate. We could talk. Things could be done instantly. Now it's like I gotta get out of Zoom. I'm on the Zoom or Microsoft Teams call all day long.
Yeah,
it's crazy. And so we are just living.
It's the way you get things done. It's the way to get things done because you're out in California. You have people all around the country working for you, and in order for you to collaborate and make things happen, like you, I'm on Teams all day. Making decisions, having conversations. My VAs in Japan and in the Philippines and all around the country. It's just constant communication. But to your point before, The companies that are growing and scaling, they're doing so by employing people around the globe.
That's right.
Especially with you being in California and Chicago, high employee costs out there. And you're limited to the people who are living in a certain geographic area from your property, from your company. If you want to scale and you have the ability to do this globally, you're reaching around the globe for top talent. We have a girl from Japan who is running 2 roles in our business. Her COG score is through the roof. She's a literal genius, had no clue about our industry at all, but within a relatively short amount of time, she just completely excelled and is for the next level.
It's all about onboarding and training and consistency. Like today we just hired a kid. Okay. I made him an offer over the weekend. Really excited for him to join us, understands what he does in acquisitions, and he lives in the Southeast. However, just because he's not in California or Chicago, or he's not next to me in my office, look, I would love to have people in an office. I'm old school. But I know in this age, it's like if I can get the best talented person, and so in this example, he lives in the Southeast, but I spend time with him and he's accountable and he can measure up. The problem is that I see, especially with this younger generation, is there's a real they like to jump from job to job.
Bro, we get resumes, and every 6 months to a year, these people have a different job.
I don't even want to interview those people because
I don't interview them.
I get turned off. I'm like, oh, there's no loyalty there. What's going to be loyal to Alliance if I hire this person?
Yep.
And so for me, I look at, and I'm not blaming hey, maybe a situation doesn't work out or a company goes under, whatever.
It's a good story, but when you have a history of somebody that every year
you look at
a different job,
right? You look at 4 or 5 jobs, right? You go 4 or 5 deep on someone, and you're like, okay, 2 years, 1 year, 2.5, 3. What's the issue with this person? I always ask them, all right, tell me, what are your goals? And trying to figure out if we align with them. But it's a challenge. For everyone out there that owns a business, I feel your pain. I mean, it is not easy with employees and this remote working and the Zoom calls and the Teams calls and all this stuff we have to deal with employers. And believe me, I'm not complaining at all. I never make excuses, but I will tell you that this environment is a little more challenging than it used to be because of the just the culture is different. Our generation, it was an old school. It was meeting people, handshakes, green ledger paper, stamps, envelopes, hard checks. So there was a real follow-up mechanism that came in business. I mean, remember fax machines? Did you get my fax? Follow-up was ingrained in us, Billy, when we were younger, because you had to, did you get my message? Did you get my fax? Did you get my email? Whatever it is. So one thing that I'm outstanding at is follow up and seeing things 5 steps ahead of people, because that's how we learn business. Yeah. But the newer generations aren't learning business that way. It's like everything is instant. Direct message me, text me. Hey,
their follow-up skills are non-existent. You need to train them on how to actually follow up and follow through. It's one of the things that we preach inside the business. And I have processes and systems outlined in our construction company, outlined in our fix and flip company, the tools that we utilize. I'm a stickler for making sure that the communication is there and to close the loop, right? If you have something, this is something we teach simple. If you have a task that you're doing or a project you're trying to complete, and you have a thing that you've done, whatever that thing could be, a phone call, an email, a follow-up, and you don't close the loop, if it's not completely closed, what you have to ask yourself, what is the next step? The next step is XYZ. Make sure you document it, put it in your task follow-up, because if you're trying to remember everything you need to do, you're going to do nothing right or well, because you're going to drop the ball 99 times out of 100. It's just not going to work out. You have to have a system, you have to have a protocol, and you have to make it freaking easy to where it's just an easy press of a button, follow up the next day, and make sure you have your conversation notes, and nothing will fall through the cracks if you're doing stuff like that.
Well, I always, I'm a big legal pad paper guy. And I tell everyone, if they walk in my office or they work for me, is have a pad of paper next to you to write down. One of the lost arts I find with people is they don't write things down and they expect that they're going to remember. So it used to drive me nuts when employees would come in my office and I would start teaching them something and they would have no paper to write down the lesson or the follow-up or the process they need to learn. And then they come back to me the next day. I would get so aggravated. I'd be like, why didn't you write it down? So forever out there listening is write down, carry paper with you, a pen, no matter where you are. It will serve you well over your career.
Ben, I want to shift gears. I want to get into your business. So I know you're doing commercial real estate.
Mm-hmm.
Are you doing high-rise units? Are you, like, what type of commercial are you doing? There's so many different asset classes.
It's a great question. I mean, I could take down any asset class if I wanted to because I understand the fundamentals really well. But
what are you focusing on?
But yeah, so my focus in my career is office, industrial, and retail. That's what I'm an expert at. Okay. So throughout the years, we've owned general office, medical office, retail, different types of industrial. We've done some multifamily. We dabble that a little bit. We've done some mixed use in our careers when we were younger. However, the last, I would say 19 years, we got involved in medical properties, which has been phenomenally successful for us. And we just launched a new fund, the Alliance Medical Property Fund. It's doing really well. We've bought 5 assets so far in it. And then also one niche that Billy, about 5 years ago, we got into is the veterinarian office space. So veterinarian office and medical office have a lot of synergies and similarities to the underwriting. And so we realized, okay, well, let's expand our footprint and get into the veterinarian office space. And so a lot of our focus, a majority of our portfolio now is medical office and veterinarian office. We still own some office space. We still own some retail, a little bit of industrial, but we've sold off a lot of those properties. So generally speaking, we look in what I call the smile states. If you start in Virginia, you draw a smiley face around the United States. That's generally speaking where we're touching. We head into Mountain West, parts of the West Coast. We're big in the South, Southeast, and Southwest. We don't buy much in the Mid-Atlantic as much anymore, or the Northeast or East Coast, or even the Midwest and Chicago and all the surrounding states. We used to, but part of that temperament is we decide we want to go where population growth is.
Yep.
You take medical office, healthcare, it's like, where's population growth? Where are good healthcare policies? Where's pro-growth?
Mm-hmm.
So people laugh and they say, wow, you own properties where hurricanes are going to hit. Well, yeah, we do a lot in Florida and the Carolinas and Georgia and Alabama and Tennessee.
Older population growth.
Population growth. And so for us, we've had great success. So our investors have done extremely well throughout the years. Our metrics and our returns and track record is incredible, especially medical office. We're mid-20s IRR.
That's great.
And that's
what's the usual turn time for that? Is that a 5-year out?
Yeah, it's usually 5 years or less. That's a goal. Some properties we have to hold longer. It's ability to hold.
Yeah.
But generally speaking, some deals we're in a couple of years, we're in and out. Sometimes we'll buy, Billy, it might be a 2 or 3 year lease. We add value, we renew them for a long-term lease. Say it's a single tenant net lease asset, and then we sell it. And so we have a great process to move these assets into the marketplace. But we are outstanding at adding value to the income stream and the properties that we own. And by doing,
let's go through that. Let's break down that, Ben. So what do you do to go in and add value to increase the price? I have no experience in your niche you have right now.
So some of the ways there's a lot of different ways we add value. One could be the credit of the tenant. Okay. It could be the credit worthiness of our tenants in the building adds a lot of value because it brings stability. In our business, people look at default risk. Default risk means, Billy, is what's the probability that my tenant's going to default on the lease? So we try to minimize that risk as much as possible. And that creates a lot of success. So what we look at financial statements of our tenants, we look at investment into the property. We look at where they're expanding. We look at competition. Can they go build somewhere else? So we do a deep dive on all our tenants. And that's how you could add value, because you could see, okay, is there an opportunity? Is that tenant going to get bought by another tenant, increase the value of my tenant's credit worthiness? So there's a lot of factors. The other thing we look at is where's our rents? Where's our rents compared to market? Are rents below market? If we have a renewal, can we increase rents? We look at that when we're underwriting an acquisition. Another ways are escalations in the rents.
Yeah.
Other ways are lease terms. Longer term leases add more value, are more valuable in our business than anything else. And so we look at credit worthiness, we look at lease terms, we look at investment in the property, we look at locations, exclusivities. And so all these little nuances add value over time. And so when you put it together and you can add value to the income stream and the property, it provides a great exit because it lays into the market of, hey, maybe we're hitting a 1031 exchange buyer.
Yep.
Maybe it's another fund. Maybe it's an institution that wants to take us off our hands. The reason why, Billy, the Alliance Medical Property Fund is so attractive to investors is because institutions want a company like Alliance, who has our pedigree, our leadership team experience of 200 plus years, to roll up a portfolio of great properties and season it and enhance it and beautify it, and then lay it on a silver platter to a pension fund, an insurance company, you name it. Well, that's part of the value proposition, and they'll pay us a premium to do it because they don't want to roll up their sleeves and do the dirty work. It's more about, hey, give me a few $100 million portfolio, Alliance, and let us take it off your hands because you did all the hard work.
Yeah.
We just want the cash flow, and eventually we'll do our thing and then we'll sell it, which is great. And so if I can help that Hawaii teacher out there in the world in a pension fund develop income through a safe, secure, and profitable investment like medical office, that's awesome. That means I'm doing. And by the way, I'm also benefiting the medical community, the healthcare, because there's a lot of benefits when you buy a medical property. It's, you're solving someone's issue or problem. Anytime we buy a property from anyone out there, a company, an entity, it's, again, our company is solving some sort of problem they have going on or to achieve goals. It could be more equipment, could be expansion. And what I love about the medical office space business, Billy, is that when you own that real estate, you really get to know the different niches. Well, every niche in the healthcare industry has different requirements, different licensing, different investment needs, different metrics. And so it creates this high barriers to entry to people to really understand what the investments are. So we provide as a company this outstanding expertise to investors to create wealth for them and their families. And so I'm really proud of what we've been able to establish, because the novice that says, hey, I can commit 100,000, 500,000 over a call fund, have it called over a period of time, get cash flow every quarter and some upside on the back end and tax benefits. It's a beautiful thing. It's why I love what we do.
Yep. How many assets? What do you have on the management?
Right now, we probably have over 65 assets.
What does that equate to? How many millions or hundreds of millions?
Probably over 350 to 400 right now. We've sold off a lot of properties, Billy, and so we're constantly ebbing and flowing. So I don't really look at, assets under management, because once things happen, we're going to sell them.
Sure.
Okay? And so we're going to turn it for our investors as much as possible, because they like to see their dollars turn and redeploy.
Yep.
And so it's kind of a little bit shorter with 5 years or less. Sometimes we'll hold something longer, but the name of the game for us as a fiduciary capital is add value and sell it as a property and keep going with our investors and keep building wealth for them. So, if I was in the business where it was just, I was buying, and I have my own portfolio, but if I was just buying assets alone, it would be a lot different. I would be holding them for a long period of time. But because we're fiduciaries and we offer a 5-year hold, we're trying to move assets and being timely about it.
What, with your underwriting, take me through how many deals does your underwriting team need to look at to convert those over into potential like LOIs and then into eventual deals? What does that look like? And how are you sourcing your deals?
Right. So, let's just go to sourcing. We'll start with that and then we'll talk about it. So we look at hundreds of deals a week. So you get to a point in your career where deal flow just starts coming in. So I write a blog. I'm a thought leader in the business and an icon. And so we get a lot of deal flow through brokers. We have our own marketing programs going directly to sellers. And so we're out there and people know we're out there. We're constantly pushing the envelope in marketing of here's our criteria. Here's what we're looking for, bring us deal flow. And we'll close. We never put something under contract, generally speaking, that we don't close. Something has to be drastically wrong with that property if we're not going to close. So people know we provide certainty. At Alliance, if you think of Alliance, it's certainty. And what that offers, say the brokerage community as an example of where we source deals. Well, if you're a broker and you know you're going to get paid and you know Alliance is going to close, it's an easy discussion to have. And so there's a lot of different ways to find deals. So we touch all the different ways. A lot of it's referrals. We have accountants, attorneys.
Yep.
We have investors. We have some doctors are like, hey, man, I own this property. I'd like to do a sale leaseback. Will you take a look at it? And those turn into great deals. So we see there's a lot of inbred going on between our investors. And our investors, we have a lot of doctors that invest with us and a lot of professionals. And some of them own real estate and they want to solve their challenges. So they're like, well, wait a minute. I have a relationship with these guys. I know them and trust them and like them. I'm going to have a discussion about my real estate. And if we don't buy it, I could always introduce them to someone, or I could say, hey, here's something you can consider in order to make it more valuable to you. So we're in the business of helping people. And so how to answer your question of conversions, it's a real difficult challenge because every market's different. So if you look at this market, Billy, there is a gap between the bid and the ask going on right now. Sellers are looking for these pricing we were getting 2 years ago, and they still believe they can get it. Interest rates have risen, and people forget the cost of capital has gone up.
Yeah, they still think it's 2 years ago. It's so even in the residential side, it's the same thing.
Right, it's the same thing. And so in commercial, you look at the cost of capital, and a lot of people put financing on these acquisitions and leverage because of the numbers, and the numbers are big in our business. So there's a lot of leverage gets put out there. Well, if the cost of capital right now is 8+% on a 25 year amortization, maybe 6 to 6.5 face rate, so your loan constant's in the 8s. Well, guess what? If I can't buy things in the 8s on a cap rate, it's a little bit challenging. So you also have to be creative. Am I doing some interest only out of the box? I have a long-term lease that I could ride it and get 10-year financing? What am I going to do? Commercial real estate and residential has much different financing parameters. And so for us, that's a challenge. So my acquisition team, Billy, might look at 200 plus 300 plus deals a week plus and buy and put an offer on nothing. They could 1 week see 50, 80 deals, 500 deals, depending, and put 7 offers out there. So
I'm sure with that many deals, how many people you have in the acquisitions team, out of curiosity?
We have about 5 that are cooking acquisitions. So
you have to have some sort of a process that you're not doing full underwrites. You're doing like a quick review to see if this
quick and dirty. Yeah, it's you get to your career. Yeah, I mean, for me, I can do a quick and dirty and say next. Doesn't work. Next.
Yep.
Some of the younger folks, when they're in acquisitions, they're looking at it, and one of the biggest challenge I teach them is don't glom onto deals, like, because it looks shiny, it looks good, you like the location. If the numbers don't work, you can't buy it. Or if it just doesn't make sense, you got passed. So the ability to say no and the word next when you're looking at a lot of deals is so important.
Like this, quick.
You got to move. It's like the back of the napkin theory. It's like, I gotta look at it. Numbers don't make sense. I'm on to the next one, and you keep going. And so it's the same thing.
What is your process to say if you're within a certain percentage of the ask, you'll then take it to the next step? Like, what does that look like for you?
Well, it depends. It could go either way. You might take that approach and say, hey, if I'm, within, it depends because the numbers are big, but let's say it's a $10 million deal and I think it's worth 9, you put an offer in. Now, if you think it's worth 7, you could still put an offer in, Billy. It's just you might have to tickle it. And so we use Salesforce as an example. So you tickle it. And then when you tickle it, it's like, I'm going to call the seller in 30 days. Because guess what? Especially in this market, we've seen it. Sellers are sitting and things aren't moving so quickly. So what ends up happening is you end up sitting and sitting and sitting. And guess what? If you follow up with that seller, who knows, 60 days from now, I'll be like, that's 7. I could do it maybe for 8 million or 7.5 million. Okay, let's have a conversation. Okay, I can get you 7.5 million, but this is how we have to structure it. And so now you gotta get creative, right? And so this business is all about opening your mind, your filter, your lens, and figure out, how do I bring 2 parties together, with us being one of them, the key party, the one with the money, to make it happen. So at the end of the day, it's a numbers game. It's, the more hands you shake, the more money you make. It's still the same principles, but you have to get out there. And I tell our acquisition guys, and it's like, there's no hidden secrets. You got to make calls. So they're making 50, 60 calls a day. Some of these guys, and they're hustling. And that's what I did when I was young. So
You have to. That's the only way to do it.
I've lived and excelled and worked hard in every single sector of my company. Yep. So there's not one item or person that I can't resonate with because I've been in those shoes. I've understood because I had to when I was younger. I had to be involved in property management, asset management, financing.
You had no choice. You were a one-man show or a couple-man show. You have to wear many hats.
When I was a young man, you had to wear a lot of hats. And guess what? You become a 7-tool player, and you can teach people. And so in acquisitions, if someone doesn't want to make the calls, it's like, look, you're not going to be successful. And they can't say, well, you've never done it. Oh, sure. Yeah, I've done it for decades. And so it doesn't stop. And so
your acquisitions team in your community, your business, they also do the underwrite. Is it the same person?
Some people do. I mean, we do have analysts that will underwrite it, but the quick and dirty, when you look at a deal and see if it pencils out, is the acquisition. The acquisition person should be like, hey, Alliance or Ben, here's why we're doing this deal. Low vacancy rate in the mirror, high barriers to entry, heavy investment by the tenant, has 50,000 people in a 5-mile radius, good density, great lease, tenant does well. This is their number one location, and it's perfect for the new fund. And so you can go through and analyze this quickly. And the key to acquisitions is the questions you make. And it could be whether you're merger acquisitions, commercial real estate. What I find a lot with folks is they're not asking the right questions. And so to give you an example is understanding, why are they selling?
Yeah. Key question.
What's the goal? So, and what happens if you don't reach your goals? And then understanding, and then having them understand you of, well, I can help solve your goals. And this is how we do it. And this is how we can structure it. And so I have to identify, why are we having a conversation? What's your challenges? Because the only reason someone's selling to us, Alliance, or anyone in the universe is there's a motivation. There's some sort of you have to have a motivated seller to transact, because, it's just the nature of our business and any business. And so at the end of the day, it's like, well, what can I help you with? What's the goal? Well, I want to expand my locations. I want to use this to buy new equipment. We want to hire more people. We want to do a sale leaseback. We don't need to own the real estate, and it's a tax benefit to do that. There's a litany and a variety of solutions. Yeah.
But to your point, you really need to uncover. Your acquisitions people need to uncover what those issues are, because you can't solve the problem if you don't know what the problem is. You can't come up with a solution and give it to them on a silver platter if you're not asking the right questions and picking their brains in the right manner.
It's absolutely correct. It's the same way with raising equity. The first thing is, why are you coming into our universe, right? There's millions of accredited investors and families that invest with us. If Billy, you invested with us, the first thing we would say is, tell me about what you invest in. What problems are you looking to solve? Well, I'm investing in multifamily and I'm struggling because we bought them at low cap rates and I'm not getting consistent cash flow. Okay. Well, at medical office, we get consistent cash flow. We could solve that for you. Okay, what else? Oh, well, I invest in here and there, and it's not as transparent, or I don't like the sponsorship. They're not communicating well with me. There's always something going on in their investments or portfolio, or they might say, hey, I like medical office. I want to diversify, Billy. And you guys have a long track record, a lot of experience, and it's great. It's 24/7 availability to look at what I invested with Alliance. Great. I love that. Mm-hmm. So there's always something that I am solving for an investor. It's the same thing. Acquisitions, raising equity, very comparable. Is identify the problem, identify what's the challenge, and solve it for them. And guess what? You keep doing that in life, you will build wealth.
I love it. I mean, that's it right there. Put a period right after that. Let me ask you this. With your fund, how is your fund structured? It's still syndications, right? Well, it's the syndications that you're doing?
Well, the fund is one big syndication. I mean, people forget to tell you that because it is basically the fund is one LLC.
Yep.
And it holds, this fund is 50 million equity. It might grow to 100 million based on demand. So say at 50 million in equity, you're probably going to have anywhere from 20 to 26 assets in the pool. And so basically, if you invest in the fund, you will own a portion of all the assets in the fund.
Yep.
Every property is in its own LLC that's owned by the fund LLC for liability purposes. And so we have different investor classes. So we have a class C, B, and A investor. A class C is $1 million commitment or less. They get a 6% preferred return. That's an annual return paid quarterly. And then if you commit $1 million to $2.5 million, you're class B, that's a 7% preferred return. And if you're class A, you commit $2.5 million or more, you get an 8. And then on the back end, the investors get 60% of the net proceeds up to the first 12% IRR. And after that, we're 50-50. And we project we're probably going to be in this environment because we see a lot of buying opportunities forthcoming with rates and refinance struggles and everything in our business. And where people bought deals in the past, we believe we'll probably be in the high teens to the 20s on IRR when we exit the fund. And so I'm really excited about this environment. I've told my staff and my team, be patient. If we have to go 6 months without buying a deal, that's okay. We'll deal with it, because one of the most important things is the investor comes first. And I preach it, I live it, and I'm also an investor in what we do. And so I know it's like you have to be patient. This is a marathon business, okay? It's not, I'm trading on the Mercantile Exchange or the New York Stock Exchange. I'm not turning things quickly every day and say, oh, I made 10 grand today. It's different. It's a marathon business. And so if you know that and you respect it, and then you respect your investors, I have a saying in my business for my company is every single penny that every investor ever invests with us, you better honor and respect that, because you have to really respect the fact of how hard and how much time that person had to grind and the risks they took to make those dollars and those cents to be able to invest in Alliance Medical Property Fund or a syndication of ours.
Yep.
And I realize that. And when you have that mindset and frame in front of you, guess what? White glove service, 7-star experience to invest with them, with Alliance. And that has meaning to it, because you know why? That's how the marathon business, people always say, well, how have you been in the business so long? Most people jump in and out of this thing. It's because I care.
Yeah.
Because I am grateful and I appreciate everyone that has helped us get to this way. Our investors, lenders, brokers. You don't forget those days. You don't forget the days you're in your 20s, you got nothing in your pocket except for lint. And then you realize, like, oh my God, look at all these people that have come in and helped me in so many different ways and grown and learned.
Yeah.
And so gratitude has to come into play. And part of that is we need to honor, as a company, everyone here, how hard these investors have worked and what a privilege it is to meet all these wonderful people that have invested with us through the years and that will come in the future, that they worked so hard to build their worth in order to become an accredited investor, invest with us. If you don't see that, you should not be a fiduciary. And I say that to my staff and people out there, is like, if we don't value every single penny everyone's ever invested with us over the years and in the future, we shouldn't be doing what we're doing.
Yeah. The number one rule is before you make a return, the number one rule is capital preservation.
That's right.
Preserve their capital. Do not let them lose one single dollar. And then make sure you try to deliver on the promise that you have of your 20+% IRR after a 5-year exit.
And we'll make decisions where we might suspend a preferred return distribution, say on a syndication, because again, it goes back to your point, preserving capital. You have to make a lot of decisions quickly. And sometimes it's like, well, you know what? I want to build up reserves to have the ability to hold, because the ability to hold is the most important thing in our business in commercial real estate. And so at the end of the day, we'll report to our investors. We write letters, good and bad. And I'll say, hey, your 8% preferred return, we're not paying this quarter. And let me explain why. And I would say all our investors get it. They're like, okay, he's preserving our assets. They get, because they're sophisticated.
Sure.
And they're like, he's doing the right thing. And you know what? When you build up reserves and you have the ability to hold, good things happen. Because I look at the whole package. I'm like, okay, how did we do at the end of the day? Because good people are like, well, what's a good deal? Good deal is when I could look in the rearview mirror, Billy, and I could be able to look back and I'd be like, that was a good deal. Oh my God, we had 30% IRR. We 3x investors' money. How did you do that? But you look back after doing all that and you look at the little things that happened, like all the grinding throughout the days up to that event, that capital event. And so it's a marathon business. It's not for the faint of heart. It's not the easiest business in the world, but I'll tell you, you get to a certain point in your career, you've been doing this long enough. It's a wonderful business and you can help a lot of people and grow people. So
Ben, if people want to get involved with your fund, how do they go about finding you?
Well, there's a lot of different ways. I'm all over social media. Okay. They can follow me on Instagram and Facebook and all the different mediums out there and direct message me. LinkedIn is another great, I'm big on LinkedIn. People can direct message me there. They can go to our website. They can email me. If you go to our website, we have a ton of content on medical office. We have testimonials from investors and brokers, and you name it. It stands on its own. I'm a big person of let the public speak about us, not us. Mm-hmm. And so there's so many different ways that you can follow me, engage with me. You feel free to listen to my podcast, Ben Reinberg. I own it. We talk about health, wealth, relationships, business, commercial real estate, etc. But there's so many different ways to stay engaged with me. And if you're interested in the Alliance Medical Property Fund, the best way is just to reach out to us. Go on our website, shoot me an email, get a hold of someone on our staff. We'll get you in the right direction to get on calls. What's interesting is we're doing ads on Facebook and Instagram, and they're really doing really well. So people are booking calls with our team, and they're getting on the folks with our closers and our acquisition staff, and that's going on really well. So there's so many different ways. I would say the best way is connect with me on LinkedIn, because then you could really follow me. I write a lot of articles, and you could DM me on LinkedIn, and I'm very responsive on LinkedIn, and I will reach back to you. Instead of having one of my associates in our investor relations department, which we have a large investor relations department, you might get a call from me, because I don't get an opportunity to raise as much equity as my team does, but I love getting on the phone with investors because it puts me back to the day when I had to raise equity. So if you reach out to me on LinkedIn or Instagram, especially LinkedIn, you might get a call from me. Don't be surprised if I pick up the phone and call you and say, hey, Susan, I saw you.
Man, it's Ben.
It's Ben. Like, who? And I'll be like, hey, I wanted to talk to you about your email. How can I help you? And then I'll get into my understanding, just like I said, is I want to see what your goals are, what your struggles are, where you invest, and how we can help you. And once I do that, it's pretty simple because it's just a straightforward project. What I love about what we do is it's transparency. You can kick the bricks and mortar, and this in the residential sector. It's like, you want to see what you're investing in? Go fly to Florida.
Yep.
At a portfolio we just took down for you guys. Go fly to Las Vegas. Go fly to Denver, wherever. You want to see what you're investing in? Go see it. Yeah. And I welcome that. I'm like,
so much different from investing in stocks and bonds. It's just so much different when you have a hard asset.
Oh, it's the best. It's like, go see what we're doing. Let me show you some syndications we've done in the past. I'll show you case studies and look at this deal. Okay. You live in Chicago? Okay. Well, we bought this deal in this suburb. Go take a look at it. It was a phenomenal deal. Let me tell you the story behind it, what we did. So what I love about what we do, and what I love with our investors, is we have this great investor portal where it's 24/7. It's letters, reporting, K1s, information constantly. Yep. We direct deposit quarterly returns through the portal into your bank account. You control your own banking information. We don't even see it unless you want us to help you. So I love that transparency. I love the comfort level it builds. And that's why I'm spoiled, because that's why I love investing what we do, because it's spoiled me with that certainty, comfort level, safe, secure nature. Because people are like, well, Ben, you're really conservative in your investing. I am, because that's what I know. That's my comfort level.
That's your mindset.
I'm not the hedge fund guy. I'm not the, I've invested in some crazy stuff, but when I do, it's kind of like thin air. It's like I'm investing in technology. I'm betting on the team to be able to find me a return, but I don't see what the asset is, right? Yeah. And so it's different in commercial real estate, especially with Alliance. If you invest with us, It's white glove service, transparency. Our core values are transparency, integrity.
And the website address is alliancecgc.com.
Yes, it's alliancecgc.com. But you can find us out there. We're out there. And we do.
And what did you say your minimum investment is, Ben?
So in the fund, the average investor usually commits about $250,000 because it's allocated over a lot of properties, and that's the benefit compared to one syndication. But our minimums are $100,000. But we have investors of all shapes and sizes. It's what you're comfortable with, and I can assure you from talking to our investors is once you come into Alliance's universe, you're not going to want to leave because we're going to spoil you. We're going to treat you better than how you should be treated. We respect every penny you earn, like I said previously. And so we want you to have an enjoyable experience. And we lean our investors like we look, hey, how do we get better? How do we improve? What do you like? What do you not like? And so we're constantly surveying who we are and saying, how do we make this even better? And so, and even with technology. So it's been a wonderful experience and really proud of my staff and everyone that's helped us get to this point in my career. So it's really been a blessing.
Ben, it's been great having you on as a guest. You are a great speaker. I mean, I can see why you're all over the web. You're out there. It flows. It's very easy for you to speak about this. I can sense and see the passion in your voice with what you're saying about your company. So really good getting to know you on today's episode of Unstoppable REI Wealth.
Thanks for having me. What a privilege to get to know you and be on your show. Thanks for having me.
Likewise, Ben. Thank you.